let's move on to Jabil. It's a company that maybe people haven't heard of. I mean, it's been around for quite a while. 1966, founded in Detroit, and like most people from the Midwest, they migrated to St. Pete's in the Tampa Bay area of Florida. So as they matured, they decided to come to the sunshine. This is a market cap 13.46 billion. Big tech company. They are in many different areas. And so you've got to, when you're looking at the tech stocks, you've got to think, what is it that they do? And these guys do a lot. They're involved in they're involved in AI. They have a really major, and this is one area that I like, major area in drones. They are into the technology that is used in the drones. They're not necessarily producing the actual drone. And that goes to what we were talking about as being suppliers. They're in the optics and the electronics involved and everything that is part of them. And this is their niche, and they are a very big supplier, like Cadence, to Apple. Now, I'm not sure if that's a concern we should have, that if everybody ties back to Apple somehow, does this mean that we've got to buy up the line and buy Apple at the same time, and just to hope that they continue to innovate? And that is a major concern for any company, but this particular company, they just got a new CEO. They design, they make, they deliver. They've got a huge supply process. They're involved in everything from the Alpine Formula One team through electronic grids and smart home appliances. They're into the defense industry. They have tentacles everywhere. And in fact, they're in, I think it's about 100 different countries. And they really do cover a lot of different areas. One of the things that you've got to look at is what their returns are. They're an A- company. And if you look at their returns over the last 5 years, it's like 282%. And it's been fairly consistent throughout. They've got great returns over the 3-year period, the 2-year period, the 1-year period. Year to date, I mean, they're up about 51%, 51.5%. They had a little pullback yesterday, but they're up this morning. So they are a little volatile. I think volatility was mentioned by Mandeep before. There is some volatility out there. People are looking at investing, but they're also taking profits. And so there is certainly a little bit of volatility out there, which is good for an investor. If you do get your timing right, and trust us, we don't try to time the markets. We believe in companies. So that's what we measure in. So this particular company, they've got great growth, great efficiency. They're solvent. They've got good returns. The volatility is there, but they do have a downside, and that is their dividend. They've had the same dividend for years. And I don't know why that is. Normally, a company with their sort of record would actually increase the dividend as they go along, but they don't. They just don't do that it seems to be almost as a policy. But now they've got a new CEO who's been with the company for many years. The market reacted confidently to that. There's no disruption to the company. As they have many years, they've right-sized every year. They seem to make a few adjustments to their staffing levels, and they seem to do that every year, but it's never major numbers. So it seems that they are always trying to keep on top of what they need to do to make sure that they're right-sized for their businesses at the time. And frankly, they seem to be doing a decent job of what they are what they're trying to do. As I say, I particularly like their interest in drones. I think that they are in an area that is of tremendous growth. And if they are a trusted supplier in that area, then there is tremendous potential in there. And I really don't see how that's not going to grow multiple times. I think they think that the industry is going to grow at least 30 times in the next few years. One point, though, I will say about their financials, and I know I'm jumping around a bit, and that is that they have already reported their second quarter. Their next quarter, the one that's ended at the end of this month of June, is actually their third quarter. That many international companies are like that. They don't follow a January-December year. They have different starts in the year. This particular one, I don't know why they did that, but this is so their next quarter will be their third quarter results.
Interesting. I see that a lot of the business is around the world. These guys, like the growing part of their business on an international basis is about 80% of the business, and that's growing at like an 8% growth rate. I'm using Bloomberg to help me out with these numbers just to add some more color. And in the US, which is the other 15%, that's growing at a 20% rate. Smaller amount, but it's growing at a faster rate. And the other interesting thing I saw is that from like you mentioned, like the volatility and value on a valuation perspective, this stock is pretty good. It's in comparison to Cadence and Synopsys and then the buzzword type of lifted stocks. This one is a bit more fairly valued. It is stretched. The whole tech sector is. But this one has a bit something to a bit more to consider for investors in terms of value if you're trying to look into something to get into now without having to touch something that's super, super hot.
And it's half the price.
Mm. Yeah.
I mean, you're looking at just over $100 a share rather than your 200 and so. So, right. You can have two for one here, Mandy.
It's almost like a BOGO.
Yeah, we but don't be the person who only buys the one share and leaves the other one on the shelf.
Well, I'm just looking at some of the headlines we've got on the site, and it looks like earlier this month they announced what are called low latency servers, and I'll kind of dive in that without a lot of geek speak. But basically, so if you're looking at building a technology portfolio, again, we just got done talking about this web, right? So where do companies connect? Who do they connect to? And so by Jabil, we have to decide on what we're going to call this company. By the company deciding to get into this high-speed server space, think about it, just the same way you would if you were dealing with, let's say, sewing machines. So sewing machines have to put down a certain number of stitches per minute or stitches per second, right? Literally, how fast is this needle going up and down into the material? Because that's what's going to determine how many things you can sew per day, week, and month. So you would obviously want a machine that goes fast, but you don't want a machine that's going to go fast and is going to break really often, right? Because now you got a problem with replacement costs. You have downtime. There's what they call butterfly effects from having a machine that goes too fast. Well, the same thing goes for computers. Is in the computing world, you don't just need high performance, you also need low latency. Now, low latency is another way of saying how fast is the needle going up and down. Because if a machine goes down really fast, but then for whatever reason it comes up really slow, that's not going to be good because you can't feed the material in as quick. So by this company getting into that place where they've got really fast computers, companies that do want to participate in AI, or they're going to use AI-enabled services, they need these kinds of machines. So again, AI is the rage, but you've really got to be careful on how you're going to participate and understand are you participating for the short term? You probably know ChatGPT. That to me is a short-term play. Software, that's going to be replaced in a heartbeat. The company's probably not even going to be around in 5 or 6 years, maybe 2 years. But when you talk about having a hardware contract, you're selling a company computers. If that computer needs to be upgraded, you're more than likely going to go back to the company you bought it from, not from somebody else, because you've got to rip that physical computer out and replace it and plug stuff into it, which is very time consuming. I mean, you think about you replacing your personal computer. Same thing goes for a company, just times 10,000 or 20,000. So that's really interesting to me in the sense of understanding what this business is and what they do in the world. But also, if you're looking at tech stocks and thinking through the web, you can look at that Jabil is now in the high performance, low latency server market. You can kind of look at other companies that are also in that space, see how this company stacks up, but then also maybe find something downstream or upstream that you can also participate in. But having said that, I wanted to use that as a segue. Gavin, you mentioned Apple. At what point do we get into basically a correlated portfolio where if everything is going upstream to Apple, don't we just own Apple at some point?
Well, probably you're having a bite of the apple at a lower price point, a lower entry point there. So actually, you might be better off because you're going to be diversifying with the individual investments, and you're going to be hedging your bets on their successes. So, I mean, I'm not saying you wouldn't want to buy some stock in Apple. I missed out in 1997, 98, and have regretted it ever since. But no, if you look at what these companies are at, they are about the future. They're not just about doing something for now. They are about the future. And to your point that you were making, one of the things that Jabil says is that they want to be doing the right thing, and they said that's been their mantra for 50 years. So they aren't about just getting something out there quick and easy, cheap, make money and move on. They look for long-term partnerships. They're about quality. They're about being able to maintain that credibility throughout their whole flow of businesses. So no matter where it's going to, whether it's part of their optics area or their the wiring looms that they produce, that sort of thing. They're all about the quality. And frankly, I don't think that companies like Apple will settle for anything less. And this credibility is so crucial for survival in the long term. And I think both Cadence and Jabil have hit that particularly well. They are about being there for the long term, and I think we can get behind that.
Now, you said something that really caught my ear, and it was something maybe that the company said that they want to do the right thing. Where did you find that?
They actually make that a point on their website.
Back to the basics.
It's important for them, and you know, if you start off with saying, "Hey, this is what we're about," yeah, first of all, you've got to back it up with your actions. But if that is where you start from, we all know what happens to a company. If it goes wrong, usually it's because the header's gone rotten, right? And then it gradually sort of fell. So if you start off with the right principles, if you start off with saying, this is what we're about, we really believe in this, then that guides everything that you do. It's not about quick, cheap, easy out. It's about doing the right thing. It's about quality. It's about service. It's about longevity. And when you've got that, then you've got long-term partnerships with businesses, and they then themselves don't have failures of their products because you haven't caused a failure in their product. And if they're buying what you're selling, then it's because they want quality and they're not after quick, cheap, and easy either. So it follows along. I think if you follow you could look at all of the companies that they supply to, and you could say, well, look at it with that aspect. If they are buying quality parts, if they're buying everything that is of a quality, does that then make them a better company, and therefore they're worth looking at? It's that web. It really is out there.
All right, Al, you want to weigh in on this?
It's interesting. The way I'm thinking about it is the company that I picked is kind of a very good way. Is the other end of spectrum, i.e., it's AI enabler. It has a major role in AI theme. That said, it's a company where I think it's on the inflection point. So rather than that these guys been doing amazingly well, like Jabel, like Cadence, if I get the name correct, these guys are picking up. So while Gavin was talking and Mandeep and you guys discussing all these points, what I love about it, it's kind of it clicks, right? It starts to click. Okay, here is a good point to think about it when you look at the company. Here is something that I should have considered. It helps you to see new perspectives, like Gavin's question on potential splits. That was I thought that was an amazing question, and a way to look at things. You're not just looking at the fundamentals, you're looking at the sentiments, you're looking at what's going on in the market. And again, what I love about it is you start to get it makes you ask the right questions, if you know what I mean. It helps you to, okay, here is an area that I should, whenever I look into a stock, I should always consider. Here is another. Obviously, there is always, you have the limited resources, limited time to make an investment, but you want to make it as educated as much as possible. And again, these kinds of discussion helps me, at least on a personal level, that to go into areas that I didn't even consider before. That's my take.
Yeah, good. We've got a final stock. Do you want to jump into Juniper, or Mandeep has something to say again about Jabil?
Oh, I was just going to say one more thing about Jabil. Interestingly, the company has a market cap around 13 billion, right? And these companies that we looked at earlier, 63 billion. And those companies' market caps have more than doubled in the last 12 months from their lows, right? On this AI buzz, right? Enterprise value for Jabil, market cap, I said, was 13.5. Cash on hand, 1.5 billion. Total debt, 3.5 billion. That makes a compelling purchase for one of these companies that have a bunch of cash and this newfound equity through this AI buzz. Obviously, it's not going to go there. Jabil's not going to buy, but vice versa for a Cadence or for a Synopsys. Looking upstream, it could be an option to kind of consolidate the industry. There's a lot of fractured companies out there, and a lot of companies doing similar things. A lot of companies are downstream, upstream. There's so many different ways to play, and they all are tied together. So some of the things that Gavin mentioned just kind of like tipped me off, and like that this could be an industry that's ripe for consolidation in terms of M&A.
Nice. Let's go raise some money and get after it.